Hi, today we're going to be talking about what is an IRS bank levy. My name is Larry Weinstein. I'm a CPA and Certified Tax Resolution Specialist based in Houston, Texas. An IRS bank levy is an enforced collection activity which is taken by the IRS. Typically this happens after a series of threatening letters, one more threatening than the next, and ultimately culminating with the IRS taking the positive action of going after money that's held in your bank account. The way that they do this is that notification will be given in writing to your bank. The bank will then freeze the lesser of the balance in your account on the day of the levy or the amount of the levy itself. To put some numbers to this so that you understand, the way that it would work is if you owe the IRS $5,000, then they'll issue the levy for $5,000. If they go to your bank on the date that the bank levy hits and there's only $100 in your account, all they can get is the amount of money in your account on the day that it hits. By the same turn of a coin, if you owe the IRS $5,000 and on the day that your bank levy hits, they're going to put it, your account has $100,000 in it, and they'll get all $5,000 from your account. The bank will hold the amount frozen, which is frozen as of the date that the bank levy is received by the bank, for 21 days. It's always a good idea because the money that's in the account is still physically in the account, but the bank has segregated it and frozen that money, and it won't allow it to be used for paying any checks. If you have the financial wherewithal, it's always a good idea to deposit more money in to cover any outstanding checks. That will keep you having from NSF check charges, and it will also keep people that you wrote checks to from having a check come back to them as dishonored. Everybody will be happy if you're able to do that. The IRS can only get the amount of money that's in your account on the day that the bank levy hits. Any monies that come in afterwards, they'll have to come and do a separate levy if they're so inclined. After 21 days, if you haven't worked to get the levy released, what's called a release of levy, if that's not been received by the bank from the IRS, then after 21 days, the money is sent to the IRS. Now, the IRS will release the levy on your bank account only when either the tax debt is completely paid off. If you pay the entire debt off, obviously you don't owe the money. The IRS has no right to levy your bank account. 2, the statute of limitation prevents the collection of tax. The IRS typically has only 10 years from the date of assessment to collect the tax. After 10 years from the date of assessment, then the tax debt has to be written off. And thirdly, the IRS will have to issue a levy. Generally, you would have to have some type of acceptable solution to be put in place before the release of levy will be granted. In other words, just a promise to pay them will not be enough. You're going to have to actually do something like enter into an installment agreement or do an offer in compromise or get yourself classified as currently not collectible, which are the subjects of other videos. To receive a copy of my free book, The Official Taxpayer's Guide to Solving Your IRS Tax Problem, the 7 things you must know before solving your IRS tax problem, go to solvemytaxproblems.com/banklevybook.html. Thanks for watching, and I hope you found this valuable in helping to solve your IRS bank levy problem.